So I actually had my meeting this morning with the bank and I feel a bit deflated if I'm being, yeah, I know. And I'm actually like not sure I'm going to get upset talking about this. Anyway, I went into the room. Oh my God, I'm so sorry. I'm like,
oh, Sophie.
Gosh, we are very proud to be partnering with Trade Me for this property mini-series. So for anyone that has followed the curve for a little while, I have spoken about my property buying journey quite a bit to the point where people are like, what is happening? What is taking so long? We are doing a 3-part podcast mini-series in partnership with Trade Me Property. And whilst I'm not quite there yet on the actual purchase part, which we will get to for the rest of this episode, what I have been doing in the meantime is dream scrolling. And dream scrolling being looking through all of the amazing properties that are available on Trade Me Property, because there are more properties there than there are anywhere else. And so this has been quite exciting for me. You know, I've been looking at, let's be honest, things are quite out of my budget right now. But to see what's available from like seaside escapes, which, you know, one day I'll get there, to like amazing properties that are available in the CBD or centres of towns in New Zealand, it really is the best place to see absolutely all of my potential options. So if you are in a position where you're thinking, do you know what? I'd love to buy property, or I'm interested in what's happening in the property market and I want to know what things are going for, then Trade Me is the place to look. So thank you so much to Trade Me Property for empowering this conversation. And why not open endless doors with Trade Me Property? You can download the app on iOS or jump on your web browser, have a good old dream scroll, and if you see any good ones, please flick them my way.
I've been asking Soph, well, where are you at with buying a house? Like, you know, when are you going to buy one, pretty much? And she's like, I'll tell you on the podcast. Like all our conversations these days.
That is not true. That is not true at all.
Sometimes it's like, how was your weekend? And you're like, oh, I'll tell you on the podcast.
No, not really. I feel like I'm pretty good at, you know, giving you the inside scoop.
Yeah.
Outside of podcast hours.
It's funny, I can tell when you switch to content brain if I'm talking to you about something and then you're
really?
Like, oh, that'd make a great piece of content.
My eyes just glaze over and I'm like, I'm already planning in my head.
But no, I am very excited.
I feel a bit deflated if I'm being, yeah, I know. And I'm actually like not sure I'm going to get upset talking about this.
Should we use this as like a therapy session?
Yeah, maybe.
Yeah.
So I've wanted to buy a house for ages, and I know that it's the classic Kiwi dream, you know, to buy property. But I think the more that I've learned about investing, the more that I've leaned into the stock market. So for the last like 4 years, I've been very much investing in stocks, knowing that property is well out of reach for me. Getting enough for a deposit has been like, you know, something that I knew I was a long way off. And also being self-employed or doing freelance work or whatever, it's so hard to
It's so hard. Like banks really need to get up with the play.
Yeah. So I think for the last like 4 years, I've been investing to grow my money to get to a point where I have a deposit. You know, that's been my goal. And while I've had, you know, other short-term money goals, like I really want to buy a house.
Yeah.
And I think that the more that I've learned about property and the idea of leverage and how amazing that can be if it's used in the right way to buy a house, it makes so much sense to me. You know, like for a while, I never really understood the purpose of a mortgage, or like, I mean, I knew you needed a mortgage to buy a house, but I never really thought about the gains that can come from leveraging money to invest more than what you have, essentially.
Yeah, and I think that's why it's called the property ladder, is because you get on, then you grow your wealth, and then you step up the ladder, you leverage some more. You know, there is merit to it rather than just like property prices always go up.
Yeah.
There's actually, it does give you legs up.
Yeah,
and
legs up.
But it gives you the more you say it, the wetter it gets.
No, it does. It gives you, and so I guess just like we've chatted about this before, so we won't go into too much detail, but when you borrow money from somebody to invest, it's like it's kind of the idea of you can compound the amount you can make. So when you're investing in the stock market, if you're investing $100 a week, amazing. However, if you can leverage is just like a fancy way of saying borrowing money to be able to invest more. it means that you're getting more returns because you've got a higher amount that you're getting returns on, if that makes sense.
You're getting a more bigger dollar return, even though the percent might be the same.
Yeah, exactly. So say you invest 10,000, 10% on 10,000 is a lot bigger than 10% on $100.
Yes, exactly. Yeah.
And so when it comes to buying property, you are leveraging, so borrowing money from the bank, and you borrow a certain amount to be able to buy the house. But then when you pay the bank back, you give them back the amount that you borrowed. You don't have to give them the amount that they earned on that money that was also invested in an asset class. So
their return is what you pay in terms of a mortgage rate, not the return that the property goes up in value, that you get to keep that. So it's like you can, if the property market does well, then you get to keep the full kind of capital gain return, which is amazing. Yeah.
But ultimately the idea would be the more you have to invest, the more money you can make, right? Like that's like the premise of it.
Like wealth breeds wealth, which is incredibly frustrating, but
it's true.
Yeah.
And so I think that although I know that the return I can get in the stock market is equal, if not sometimes a lot higher than what you can get in property, there's still this like understanding for me that if I can leverage, I can earn more because I've invested more money, whereas I can only invest what I can in the stock market. Sorry, I feel like I'm really hammering down on this, but for me, it was took a really long time to understand that.
And it's not, well, the more you borrow, the more you make or anything like that, because you actually have to pay a return to service that debt, or to like almost like a thank you to the person or the bank that's lending you that money. So yeah, it's not like, oh, well, then why wouldn't I just borrow $4 million? It's like, no. If your income's only $50,000 a year, you can't borrow that much. Like you can only borrow so much in regards to your income.
There's also some really cool stats because this episode is sponsored by Trade Me, and they've sent us a whole lot of really interesting stats. And I thought this one, I love the stat, it makes so much sense to me, but 95% of people want to own their own home.
In New Zealand.
New Zealand, which I actually think probably spans beyond New Zealand. I mean, it's maybe not as high, but I still think there's a large majority of people, because the understanding also from the generation before us, like with our parents and our parents' parents, the amount that they were able to make wealth-wise through investing in the property ladder was huge.
Yeah.
It's obviously a lot harder for us now. So whilst I haven't been obsessed in the sense that it's the only way I think I can grow my money, or it's the only opportunity for me to invest, I know there's many other ways, which I have totally been exploring a lot in the last 4 years. I'm so proud of where my portfolio is, but I have also really wanted to buy a house. So I've been going through the process of trying to get pre-approval.
Which is
essentially having to share your, kind of your financial naked self to a bank for them to say they're happy with what they see, you know? So
did you have to hide any transactions? Were you embarrassed? Were you like, oh, sorry, that $20 on sushi?
No, because this is the thing that I've learned is it actually has nothing to do with what you're the bank understands that if you get a loan and you're having to repay something and that responsibility is now on your plate, that you will change the way that you spend if you need to. And so I actually, when I was putting my forms and stuff through, I actually was completely transparent about my discretionary, about everything, how much I had in stocks and KiwiSaver, blah, blah, blah.
And you're very good at creating budgets and, sticking to them. So I think definitely if you were like, look, okay, now you've got $1,000 or $2,000 a month going out for your mortgage, you'd be very strict.
Oh, totally. I'm really good with a goal. With any kind of goal, whether it's a business goal or a personal goal, I'm like a dog with a bone. Honestly, it's quite weird. Yeah. So that's kind of, I know myself, and I know that that's not really, I'm not going to be going and splashing out on stupid stuff I don't need when I have to pay a mortgage. But anyway, so I actually had my meeting this morning with the bank, and it's actually it's so interesting because before I was going in, I was like, because you don't probably normally have to go in, but because I'm a unique case because I work for myself within the curve, it's different. It's not just as straightforward as going to a mortgage advisor. I tried that, and I spoke to someone who was claiming to be the best in New Zealand and was like, well, you can't get it, and I could tell you if you could. So, and was and I was so gutted. I was like, oh my God. And also
don't deflate people's dreams.
Oh, it was
at least let them down in a nice way, and be like, maybe just not right now, but if you save X or do Y, you'll get there.
It was real shit.
I feel like I would never say that to someone.
She's obviously just like, she knows what she's up to. She's really good at what she does. She's trying to like just get to the point.
Isn't
she's
your
busy.
Dad a mortgage broker?
Yeah, he is, but it's kind of just weird to go through my dad. If anyone needs a mortgage broker, Mike Hallwright's available. But no, I think with my specific situation, I knew that I was going to have to get creative, you know, like I knew it wasn't going to be straightforward. Anyway, so I was going in this morning and I was like filming myself, being like, going in.
Oh no.
Woo, going to find out if I've been pre-approved, you know, doing my little like selfie video. And then I was recording it and I was like, I'm pretty sure I'll cry if this doesn't actually go through, because I sort of feel like I've had this weird sense of like, no, I've done this right. You know, like I've done my research. I've like really gone about it the right way. I've got an amazing team at ASB who have been helping me do it. And I know that if it's possible, they're going to be able to figure it out. Do you know what I mean? Anyway, so I went in and I was like in the waiting room and I was like, couldn't connect to the Wi-Fi. I was feeling real nervous. And I was sitting there like, wow, I'm actually like quite nervous. Anyway, I went into the room. Oh my God, I'm so sorry. I'm like,
oh, Sophie.
Sorry.
Deep breaths.
It just like, it was real overwhelming because I went in like.
Take a breath. You went in. It kind of reminds me of when I was going to New York and my dream was to go live in New York. Yeah. And I remember saying goodbye to my parents and I had my bags packed and I remember leaving the airport, getting on the plane, and I was so excited. And I was like, my dreams are coming true. This is incredible. And those that know me know what actually happened at the border in Texas. But anyway, I was escorted on a flight home, spent about 5 hours in America. And I remember sitting on the plane and I was like, I just never thought that this would be what was happening. And it was an out-of-body experience of sitting on this plane, flying back to New Zealand, then seeing my parents at the airport like crying, being like, it's okay. And I was like, oh, it's a real come to Jesus moment. But yeah, then I was just like, you know what? Just got to think of what plan B is. But no.
Basically what happened was she was just like, look, it's just so not as straightforward as like it would be if you were working in a salary job. And she was just explaining like, you know, it's.
But why? I'm sorry. I just like, I do not understand. And I would love to get someone from a bank on to be like, how are you moving your processes with the times? Because over half my friends now would work for themselves. And if that's a reflection of the country or the economy, like they must be missing out on so many mortgages. And anyway, sorry.
Yeah, I know. And I think that's kind of how I felt. I was like, if this is how I feel and this is how hard it is when like, when I've like tried so hard to get all my stuff sorted and to be really good. Like 5 years ago, me financially was a completely different person. You know, like I've grown up so much. And I think it's just like, it's just so frustrating when like, you know, there's people who are in salary jobs that are honestly probably just as precarious as working for themselves. But then, you know, if you're a freelancer or you work in your own business, it's like virtually impossible to get a mortgage.
Well, it's just like,
sucks.
Well, it's like if anyone else at the curve that was getting the same, paid the same as you, but wasn't an owner of the business, went in and had that conversation and had completely the same spending habits and savings and everything to you, but they weren't a director or an owner of the curve, it'd be a completely different conversation, which is so ridiculous that Emily or Danny could get a mortgage because they work for the curve.
That's so true. I didn't even think of that.
It's like, maybe we just take you off because you're not a co-founder anymore. You're not a director. You're an employee.
Yeah, that's the thing. I think that's why the normal mortgage broker couldn't do anything, is because I owned, you know, I think it's like if you own more than 35% or 40% of your business, you're not allowed to, and you're a salaried employee, you're not allowed. Anyway, she was like, look, it's not like a no, but she just started doing the whole, you know, if it's not now, it'll be sometime. And I'm just like, God, come on. Like it really stifles like innovation and the entrepreneurial spirit when like you're kind of the one that gets dealt the shittest, because you're taking the biggest risk, right? You know, like you have to work the hardest, you have the biggest risk, and you may have a big reward, but you might not. And like people could spend 10 years in a really profitable, well-oiled machine, be a big shareholder and still not be able to get a loan. And it just feels really backwards and shit.
Well, you could be a salaried employee earning megabucks, but be absolutely terrible at your job and lose your job the next day. You know, whereas at least with like a founder mentality, you are going to do anything, you know, blood, sweat or tears to make that business keep surviving.
Also, I'm only trying to loan $500,000.
Yeah.
It's not as though I'm trying to get like $1 million mortgage.
Yeah.
You know, like it's $500,000 and, you know, I have a plan or like ideas, which we'll get into more in this like property series of like what I was planning on doing. And obviously I can share everything I've learned anyway, even if I don't get to do it. But it's like, yeah, I think because what I was originally going to be doing was going in with my friend Ella and we were going to do it together. But she's also in a situation where she's on like a contract. So it just wasn't going to work. We were like, cool, okay, no, not an option. But another good friend of mine was in a position where he was really happy to buy property and he had a decent amount that was like enough for a deposit and some. And I was just like talking to him about this a few months ago, being like, you know, this is the situation. Anyway, he's like, look, if you're open to doing it together, I'd totally do that. And I was like, cool, amazing, like cool. So with the mortgage pre-approval with the bank, it's like, he's a no-brainer. He's got tick, tick, tick. We earn the same amount of money, you know, and I have the same amount of a deposit and amount to spend on like renovating a house and everything. And he's just like flowing through and I'm the one that's holding it up.
Did you ask the bank why?
It's just the idea that, you know, we can prove how much we've made up until now, but everything, you know, in the future is just predictions. There's nothing concrete about what our earnings will look like. So it's just like for them, they can't, which I understand.
Yeah.
Like I understand it. It's just like so frustrating to be on the other side of it. Yeah. So I'm now kind of just waiting to see like what ends up happening and if I can be she said by the end of today they'd be able to give me an answer. So because I really wanted to come in here and I was going to like make it a big deal and be like, guess what? I got pre-approved. I was going to make it like a big thing and like I think it's like, oh my God, sorry. It's been an emotional week.
Been a week. I also don't take this as like a no. Do you know what I mean? I know it's deflating. Don't get me wrong. Like, especially when you're so excited and you've actually been, I know how much you've been trying to get this across the line and how much you wanted to own a house.
Just, yeah. I think also like honestly coming back to New Zealand and like seeing how, you know, it's such a reminder, like all my friends are like having babies, buying houses, doing the traditional stuff, you know, and it's like.
You can't compare yourself to others.
I know. It's just like, it just sucks when it feels like there's nothing I can do, you know? And it just feels unfair, honestly. It just feels really unfair.
But you know what? You can just keep growing that money in the stock market. You're still growing wealth. I know you're not buying a house, but I think you're still growing your money.
I know.
And a lot of those friends that you probably look at could have huge mortgages, huge amounts of debt, be actually financially stressed because, I don't know, they could have jobs that they hate, but they can't leave because they've got to pay a mortgage. They might have had salary cuts because the economy is pretty shit at the moment. Like there's so much you don't see underneath the surface, but I know you come back and everyone looks like they're killing it and you look like you're being left behind, but you're not, babe. You're definitely not. It's frustrating because it's someone else telling you no. And I think that's the really frustrating thing is I know you would bend over backwards to pay your mortgage because I know that you fought so hard to get into the property market and also how diligent you are with your finances.
Well, I mean, I honestly,
in terms of your spending, you're like,
no, I am.
And when you set your mind to something, you know, like you wouldn't want to disappoint your friend either. Like you would totally. And it's frustrating to see how far you've come as well in terms of learning about this and actually implementing it and achieving financial goals. Yet this one goal, the bank's like, eh.
I think that's what's shit though is that the people that have been helping, and credit to ASB, like they've been amazing. Like they've done everything that they can to like try and get the computer to say yes.
Yeah.
And so it's hard because like I know that their hands are tied. I know there's nothing else they can do. Like there's only so far that but I think what's frustrating is like let's just say worst case scenario did happen and the curve went totally under. It's like I could totally go and get a way better paying job. Do you know what I mean? It's like I'm not.
And then you get a approval in a heartbeat.
Yeah, but also like even if they gave me a loan and I was a risk and the worst did happen and the curve went under, I could get another job in a few weeks. That was like, that sounds arrogant, but it's true. Like I know I could get a really well paid job that wasn't in the curve if I had to. Yeah. So it's just annoying because it's like, what do you think I'm going to do if the curve went under, then worst case scenario is I have to go get another job, which I know I could do anyway. And I could do that.
Or they sell the house and you pay back the money.
Like, anyway.
That's like, I remember I went to the bank and I wanted to go interest only, which is when you're not paying down the portion of debt, you're just paying the interest on the debt. Because I wanted to invest, I wanted the extra money to invest. And they were like, sorry, we can't do that. And I was like, what do you mean? I've got plenty of equity in my house. So there's no like concerns there that I've got too much debt or anything. You can see my salary can adequately pay it. And they were like, yeah, no, sorry, we can't allow that. And I was like, well, we can only do that for people that are in financial distress. And I was like, I mean, I can be in financial distress. I could easily.
Actually, now I think about it.
I was like, damn
things
it.
are very stressful.
And I was like, that seems, they're like, we can put you onto our financial distress team or something. And I was like, that's so backwards. Like, you'd say yes if I couldn't pay, but because I can pay, you can't say yes. I don't know. It was like quite, anyway, there's probably a lot that goes on in banks that we don't see. And they've got all other, they've got to balance, if they say yes to you, then that could throw out, other metrics of kind of risks that they're monitoring. And so I get that, but it is frustrating when it's just, they're not as flexible.
But and I definitely don't want this to sound like I'm being negative because honestly, I know for a fact that a normal mortgage broker couldn't have got this across the line. And when I say
the
normal,
one you first spoke to, she was like, no.
She's like the top in New Zealand.
ASB is trying.
They're trying hardest. So hard. And that's kind of almost what's worse about it is that I'm like, I know there's no other option because I know they're doing everything they can. So it's just like,
I have faith.
God. The thing is, this is what they said to me. They're like, do you have any other questions or other things? And I was like, oh, and they were like, are you excited? And I was like, I really was. And now I feel like I shouldn't have, like I wish I hadn't got excited. I can't believe how upset I am about this, by the way. Like every time I talk about it, I'm like, I feel my throat catching because it's just like, she said to me, she was like, her name's Michelle. I feel like she'd be fine with me using her first name. Do you have any other questions? And I was like, nah, do you know what? I just feel like I wish I hadn't got even excited about it. And it did make me think of like other people who are either like trying to get their deposit big enough or they're in a relationship and it was the only way they were going to buy and then they break up. Or, like there's so much shit stuff that happens and money is really emotional. And I think that like, we laugh on the podcast a lot and we make jokes about it, but like behind closed doors, money can be really stressful and upsetting and like,
especially when it's for pretty much a lot of goals in life, you need money to achieve them. And so, if you're trying to make progress towards a goal and then for whatever reason you can't achieve that financially, it
hurts.
Was it the fact that you were overseas as well? Did that come into it?
Yeah, so like if you're overseas, even if you're earning pounds, which is way more, the idea that you're earning like you're not in the currency of New Zealand, if the New Zealand dollar got really strong, and what you're earning overseas doesn't go as far, which seems so weird to me because I'm earning double by being on pounds, and it's not like I'm on like nothing, She said she could only take into account 70% of my salary, so 30% is technically like doesn't count.
Interesting.
So that's the bandwidth that they've got. So I think it's a lot harder if you're buying overseas or if you're employed overseas.
Because well, maybe you just take out your KiwiSaver and buy a house in London.
Oh, could I do that though?
Yeah.
How?
You just permanently immigrate over to the UK.
So I could take
you have permanently immigrated essentially, and you signed a declaration saying I've permanently left the country. You can come back. It's not like they're going to stop you at the border. And you say you can withdraw your contributions, so anything you've put in, your employers, the kickstart that we used to get years ago. And any performance. You can't take out the government contributions though. So you might lose, I don't know how much, then that's the member tax credit. So that $500 a year that goes in. So you'd probably lose
$5,000 or something.
Yeah. But you could do that and take that out and spend that and put that into a property.
Oh, that's a good idea.
Or just take it out and spend it. But hey, we are not condoning that.
No, but so I could take it out and I could buy something overseas.
Yeah. I mean, house prices are more expensive in London. Well, you might have to live
in Bristol.
About a 3-hour train ride from work. I got a house. It's on some like island somewhere.
To Bath.
But there
I mean,
options.
look, we also haven't had a solid no yet, so we'll update on that. But I think that, I mean, I think there's lots of things here as well. The idea that there's probably a lot of people listening who, you know, might not have enough for a deposit on their own. And like what I'm doing is joining forces with someone else. And I think that that's going to be really different. You know, like it's essentially like being in a relationship and the pros that come with being in a relationship.
Would your sister do it?
I've asked her. I don't think she really wants to buy property.
I reckon you could swing her.
Do you reckon?
Yeah.
I don't know. I'm like, I don't really want to force anyone into something.
No,
like
I know.
I'm really thinking of it as a business setup.
Yes,
I'm not, it's not an emotional purchase. I'm not thinking of this house as my, you know, my forever home. I'm thinking about this as purely an investment. And so my friend who I'm doing it with, hopefully, he's in exactly the same state of mind. He's like, I don't need this money for 10 years. I'm thinking of this as a long-term investment. This is my and we've asked each other. I can share the questions that we asked each other because it was
I've just got a really good idea.
What?
Should we put it to the community?
What do you mean?
Is there anyone out there
that wants to buy a house with me?
Yeah.
Oh my God. Okay. Hi.
Is that weird?
I'm Sophie. Do you want to buy a house with me? No, but like, no.
If you're purely thinking from a business standpoint.
Totally.
If there's someone out there.
Cool.
That is, you know, in a position that wants to buy a house and doesn't quite have the capacity to themselves either, or someone that wants to buy a second home, or anyone that wants to, we can set up some interviews.
Yeah, that would be fun. I
reckon we'll get there.
Do you reckon?
Yeah.
But what is this, like a crowdsourced to buy a house situation? Or is we're setting up a business?
Yeah. Setting up an agreement to buy an asset together.
But what about my friend I've already talked to about it? Are we ditching him? Is he getting thrown out the window?
I think we need someone.
A woman. So quite like the idea of it being two girls.
Yeah. No, I just think
it's not overseas, you mean? Oh, with more salary base. So you're only allowed to apply if you're earning over $250,000.
Maybe we put out a job description.
Look, let's not throw the baby out with the bathwater, as you would say.
Great analogy.
And
but who's throwing out a baby?
Yeah, like as if you'd accidentally throw the water in. Yeah, yuck. I basically feel
great movie. I want to get married in the Cotswolds.
Can we not get distracted? I feel very on. I'm not this focused normally. And
sorry.
Now I've lost my train of thought.
Yes, if anyone wants to buy a house as Soph.
No, we've just discussed we can't throw the baby out with the bathwater because.
Oh, I know, but we can just start. Okay. We can start progressing plan B, and if plan A works.
I like that.
We say goodbye to plan B.
Yeah, I like that. We progress plan B. But what would it help though? Like, that's what I'm not sure about. If someone else is in a position where they want to.
Well, you could get a third person in with you guys.
Do you think that would help?
Then you could get, Then there's less reliance on you. Do you know what I mean? Like you're only a third of the equation, not a half.
Okay.
I mean, maybe we talk to Michelle about this.
Maybe we take this one offline. But
Michelle, I've got 10 people.
I mean, honestly, why not?
Idea, yeah.
Because I think, oh my God, what?
I'm really
I'm
flying.
so here for it.
We could just buy a curve house.
Could we?
Anyone in the community, and we each have a 10% share or something, and it's just one massive property agreement. Yeah. Have I just created something?
I think so.
A property club.
Yeah. Oh my God.
Let's focus on the investing club first.
Yeah. One thing at a time.
Yeah, one thing at a time. I'm keen to know though, Sophie, why would you not want to buy in the UK versus New Zealand?
I feel like the property market in New Zealand is particularly special in its returns. And I know that this, like what it's done in the last 30 years is not necessarily like what it will do in the future. And I could be off with this, but my research is that the UK property market is pretty slow in growth, and the capital gains that I would get in the UK comparatively to New Zealand are a lot less.
Is there a sense of familiarity as well?
No, if I was to buy in the UK, it would be so that I could live in it.
Yeah.
Because that obviously makes sense, not paying rent towards your own mortgage. But if I was to buy, I wouldn't buy in the UK and not live in it. Yes. That would make no sense. And so it would mean I'd need to buy in an area that's somewhat central, and I think it's way out of my budget. I haven't done the numbers, honestly, and maybe that's something I should do before I fully decide that. But
there was this house I walked past every day on the way to work, and it was so beautiful. And then one day it had a for sale sign, and I Googled.
How much was it?
£1.6 million.
Yeah, it's a bit out of the price range.
But you know, vision board, aspirations, mindset, all of that. Walking past it every day, I was like, I don't know. But
I think the main reason is that what I'm buying is I'm wanting to buy as an investment property because I can't afford something that I would want to live in. I'm seeing it purely as an investment. I'm not seeing this as like a lifestyle purchase.
Yeah.
I want to stay living in central like London. I don't want to live in Bristol and have to train 5 hours to work.
We love Bristol, but yes.
I love Bristol. I'm very enthusiastic about Bristol, but do you think that's stupid? Like, do you think that
I think that's, I also think there's an element of you'll eventually come home. So buying here kind of makes more sense.
But I'm not thinking, again, I'm not buying this to ever live in. So that so that's not really actually, I mean, even if I did move back to New Zealand, the dream for me would be to buy this property, renovate it. I think this is what I'm sort of where I'm going down the thought process at the moment, and it's not confirmed. And I think this property series, as we like figure out the different ways of making money through property, and we're going to share kind of what we've learned, what I've learned particularly in the last few months as I've been thinking about the best way to go about it, is that like if I am thinking of this as an investment and I buy it and then I can save up again to be able to borrow again, and maybe I would like to have a couple of properties in my portfolio in general.
Yeah.
I think that if I was to buy in the UK, it would be more of a lifestyle decision, and when I have more money to be able to live in a closer area. But I honestly don't know if that's a good decision, and I'm actually really keen to hear your thoughts on that.
No, I think that's right. I've kind of been toying with the idea as well, just because I think rents are so expensive there. It's like, oh, you know, what would it be if I actually bought and was paying a mortgage of the same amount and like all of that. But again, it's where we want to live and where we can afford to live are two different things. So
yeah, so that's
but you can get a lower deposit percentage in the UK. So here it's 20%, in London it's 5%, which kind of scares the bejesus out of me. But
why?
Well, just there's a lot of debt.
But when you say it's scary, like what's the difference in having a less deposit and a bigger mortgage?
You have to pay more in mortgage repayments.
But in because mortgage repayments or in interest or in what?
Interest, which is your mortgage repayments. So your
because there's more that you owe, so you have higher interest.
Higher dollar amount. So if you borrowed $100,000 or pounds versus if you borrowed $500,000 or pounds, the mortgage rate could be the same, but because you've borrowed so much more, the dollar amount you have to pay each month has gone up. So the more you borrow, the bigger your mortgage repayments each month. Your serviceability is what they call it.
Yeah.
So that's why they look at your income, because they're like, okay, we can only lend her X amount because looking at her income and her outgoings, like she's only going to be able to afford to pay back X amount per month. So therefore we can't lend her a $4 million loan or mortgage. So they're looking at all of that as well, the banks are. Yeah, and what I'm meaning with a smaller deposit is you don't have to save up as much. The amount you can borrow might still be the same, so you might have to come down in terms of the house price you can afford, but someone with only maybe £50,000 could get into the property market, whereas in New Zealand you need a lot more because you need to have 20% of the value of the house.
Yeah, and also if it's an investment, it's 30.
Yeah. So in terms of your situation, because it wouldn't be an investment property and you'd be living in it, you might have an easier chance at getting approval in the UK. There's other things to consider, like stamp duty. So you have to pay when you buy the house.
Oh, is when you buy?
You have to buy it when you buy the house. Additional stamp duty. It'd be great to have a UK, New Zealand mortgage broker that could be like, do your situation side by side. That would be quite cool. How much are you looking to borrow yourself personally?
If I do it with someone else, we're both responsible for the total loan amount.
Got you.
So we're both responsible. So we're loaning. We're trying to get pre-approval for 500,000 New Zealand.
Yeah.
But it's not like I'm trying to get 250,000 for me and he's trying to get 250 for him. We're both liable. So if he was to default, it's my responsibility. And if I was to default, it would be his.
So the only reason you're combining forces for the deposit. essentially.
Yeah, and like the reason, well, this is what I was thinking, and I'm keen to hear your thoughts on it. I wanted to not put almost 100% of my wealth in property. It felt really risky to me to have all my money. I didn't want to be leveraged up to my eyeballs in terms of repayments. I didn't want to have the stress of like, you know, if it can't be filled for a period of time, it only be my responsibility. If renovations need to be done, I wanted all of that to be joint, and we would both put a certain amount of our pay into a shared account that was like our business account for our house.
Yeah.
So that anything like a new roof or, you know, whatever, God, let's hope not a new roof, but that it would be joint responsibility, joint repayments.
Yeah.
And then the other reason was so that I could still keep a decent amount of money in stocks, because as much as I really believe in the property market, I think that this is going to be a much, much, much slower burn. And I don't know, but like I think house prices could stay low for a while.
You've got your KiwiSaver.
And I'm not pulling it out. Well,
sorry. So yeah.
So if I buy in New Zealand, I don't need to pull out my KiwiSaver. I've got enough in what I've invested in stocks that I can use that as my deposit, and I can still keep my money in the stock market in KiwiSaver, plus like a sum left over. So my plan was then to be able to service and like keep up with my house repayments and upkeep and all of that, and still continue putting into the stock market too. I just didn't want to have my whole portfolio in property.
I would, and this is just me giving you personal friendly advice, not financial advice. I would pull out all your KiwiSaver because it is the only chance you'll be able to do that until you're 65.
Now, you mean?
Yeah, to buy a first.
Because I'm moving overseas?
No, because of your first home. You won't be able to take that out again. If you go buy another property, you can't take it out. You can only do it for your first home.
But isn't it good to keep it in?
Yeah, but I think you've got, and again, you're probably like, are you kidding? But you've been harping on about, you know, saving for time. You've got 30 plus years to rebuild that. The amount that you could make by investing in property now, by taking that out and actually getting on the property ladder and growing your property portfolio, and you've got years to build up your retirement portfolio.
I've got a feeling you can't use your KiwiSaver to buy a property if it's an investment you're not living in. I think you can pull it out for your first home if you're living in it, but there's like some kind of like intricacies there. Like I've got a feeling I actually can't, which is why I've had to find a way to, because I'm overseas, because I'm not in New Zealand, because I'm not going to live in it, I can't use KiwiSaver in the same way.
So I know it wasn't the answer you wanted, Soph, but like what, is it now just a waiting game, or like is there anything you can do now to improve your situation, or are you just waiting to hear back?
I'm kind of just waiting to hear back, and then I think then I'll make a call. I think there's different like levers or ways of approaching it. Like honestly, I feel so determined that I think the only other option would be if I was to stay in New Zealand to, you know, because if you buy your first home and you live in it for 6 months, that's the minimum you have to live in it if you buy a house.
Yeah.
Instead of an investment property, but actually buying it as my first home. I could take out my KiwiSaver, which I'm not currently doing because it's not technically a first home, because that would mean a 10% deposit instead of 30. I think just the numbers would be easier. We were
speaking about how it would make sense if you stayed longer in New Zealand.
Yeah, so, I know. Honestly.
So it could be all fortuitous. Fortuitous.
Yeah, no, I mean, a lot of our partnerships and stuff are in New Zealand still. So we actually had talked about it the other day. So I don't know. I mean, I'm not making any decisions. I'm just going to wait and see. But I just feel like, and I said this when I first started my property journey, or like first talked about it, I was like, you know, I feel like I want to find a way to do this. And I feel like I want to find, like, to not prove the system like wrong, but I'm just like, no, like don't put me at a disadvantage because I work for myself. Like it's not, it just feels frustrating.
And don't say that I can't grow my wealth and property when I've been busting my bum to get my deposit, and you're still saying no just because of stupid rules and regulations. Yeah. Yay. Deep breaths.
So I think it's all a bit TBC at the moment. But like honestly, I'm like, am I moving to New Zealand? I'm not sure.
Yeah.
But we'll see. I think what I would love to do in the next couple of episodes for this mini series that we're doing with Trade Me, because obviously I've been on Trade Me, trying to find and look at properties that are within the price range I'm looking at, around the 500,000.
Did you know
what?
That the appeal of scrolling through property in New Zealand, just flicking through looking at property, beats the desire to scroll through dating apps?
Do you think it's because there's hardly anyone on the dating apps, so it's just boring to be on?
Probably. I mean, I would rather flick through and look at amazing properties than weird people.
I also think
there's,
because I know Trade Me have an app now, I think for iOS, but there is something about the opportunity or the potential that feels more uplifting than maybe my dating life.
I also love being like, oh, I wouldn't put a deck around there. Oh, I'd paint that a different color. Why did they put it? Like you always think that, oh, you can add value or do something else. And it's so fun. Do you do that when you say it like Airbnbs? You're like, oh, I'd bowl down this wall and I'd push out that, it's actually adding value to
I have so many tabs open in my brain. And like when I'm at an Airbnb, generally it's how clean is this place? Not
you've had a bit of Airbnb.
Yeah, it's been a bit scarred. But I think that the idea of looking at what I could get, even though I haven't been approved, and like understanding the way in which I could add value if I was to renovate or add things to go down more of an active property path.
Which is a big part of owning property, being able to add value actively.
Yeah, and I think for the rest of this mini-series, we're going to record a couple of different conversations around how you can add value, whether it's like understanding the difference between active and passive when it comes to property. What would that look like? What are the risks involved? Like understanding that, because for my own knowledge, like I want to understand more about that. And just making sure that I'm making the right decision, because it is massive. It's such a massive decision to buy a house. And I think it changes massively when you're not if you're not planning on necessarily living in it. It's not a family home. I think it is just, you need to think about it more. It's not 100% a no-brainer, because there are risks involved when it comes to renovating. Like, are you good if you're not the one doing the renovations? Is it still worth it when you figure out how much contractors cost? Like all that kind of thing.
It's funny, when I was looking at buying my first home, I was looking at it as an investment property and not going to live in it. And I remember taking my dad round, because he's the kind of dad that will knock on the walls and make sure that
there's a sturdy bit.
So I'm like, dang, it's so embarrassing. And I remember we went to this one, there's this beautiful bath that took up like, over half the bathroom. And I was like, oh my gosh, beautiful. He's like, no, you'd rip that out. You'd put in 2 toilets. You'd cut a wall down. You'd make it. And I was like,
toilets?
Well, like then you'd make it 2 bathrooms. Put a wall in, and then this bathroom could be made into 2, and then you're adding value. And I was like, oh, but what about the beautiful bath? And it's that mindset of, is this a home that I'm going to live in, and then, or is it you're trying to maximize the value you can create from it, and therefore you're putting in 2 toilets and a wall down the middle. So it's. Yeah, you look at properties differently when you're looking at them for an investment or for, to live in, which you should. Yeah.
Yeah. And I think there's probably people who already own, a lot of people that already own property, but understanding like how and what the best way to add value is, I think will be a super interesting conversation for people. I guess my main thing that I found that I don't know if I'm like not scared of it because it's been so hard to try and get, but I don't feel that scared about the idea of being in debt or having a loan. And that's something I wanted to chat to you about. I was like, should I be? Like, because I remember when you were leveraging to buy a second place, it was quite stressful, and you were like, I'm going into more debt. And
I think when the bank doesn't lend you money unless it's against the asset, which is the property. So the kind of worst case situation is you have to sell that property and give the money back to the bank.
The second one, you mean?
Well, either any property. Yeah. Do you know what I mean? So it's like, as long as you're confident that the value is still there in that asset or in that property, then it shouldn't scare you. Does that make sense? So yes, I log into my banking and I see I have nearly $1 million in debt, and that should scare me. But I always think, no, I'm sitting on a house that is much more valuable than that $1 million. So I can pay that back in a heartbeat if I needed to. So that's how I think about it. So even taking on more debt and taking on an additional mortgage to buy the second house, again, that mortgage is backed by a property that is worth something. So if worse came to worse, I would sell that property and pay back that mortgage. It's like knowing in yourself, like you said, well, if I lost my job, I could just go out and get another job and be earning just as much. You are the asset in that sense. Do you know what I mean? It's like, it's knowing that that's not money that you just have to work at paying back. That money is connected to something of great value that you could easily realize. Well, not easily, but you can't just sell a property as easy as you can sell shares, but you can realize it easy enough. It might take a couple months.
And realize, for anyone that doesn't know, it's just the idea of selling it to get the money back.
It's actually converting that asset into cash, essentially. You could do that very easily to pay that debt back. So that's why it doesn't scare me. Whereas credit card debt, that scares the bejesus out of me.
Bejesus, that's so cute.
Because it's not tied to anything. It's tied to me paying it back with my salary and my income. So it's a bit different.
Yeah. Okay.
Yeah. Which is weird because it's like, I don't know, $10,000 in credit card debt scares me more than $1 million in mortgage debt.
No, I mean, I think that's the clever way to think about it. It's you go into debt to catapult your wealth, not to hinder it. And actually one is...
And that's why we talk about good debt and bad debt, is because there is debt that can catapult you and there is debt that can hold you back significantly. But I do remember when I first bought my house, having that amount of debt did take a bit of getting used to, because you've got this big negative balance
in your bank
statement.
In your bank statement? That's so
I
weird.
know, every day. I know.
Oh, that's really weird. So you log in and it's like negative $1 million or something. Whoa, that's so weird.
Whereas before, I'd never had that, and it was just my salary just growing.
So strange. It's kind of just hit me.
Yeah.
So you can see it.
Yeah.
Can't they hide
some people,
it?
you can put it in, you could have it at a different bank, or, maybe not your transaction account, but mine's all in one. So it's, But yes, so it is a psychological thing, though, that might take a bit of time for some people to get their head around being in that much amount of debt. That much amount? That's that amount of debt.
That amount of debt. But then what about if we were saying worst case scenario then, just so that I don't make a massive mistake or do something stupid? Is there anything else, like, other than the idea of like you could up and sell it if you needed to? What are some like things that actually could go wrong? Like not having insurance obviously would be really...
Well, they won't
can't even
get a house because they're giving you the money to purchase the house, so they want that house to be protected. And by they, I mean the bank.
Yeah.
So that you need to get insurance before they'd even give you the money, which makes total sense. I think the biggest thing is you and your salary and not being able to pay the mortgage repayments. It's the biggest thing that scares me, because that is money. And yes, if you got to a situation, you could talk to the bank and be like, look, I've just lost my job. It's going to take me a couple months to get a new one. Can I just pause my payments for a couple months? And they're usually pretty helpful.
And that's the principal payments.
Principal and interest. So your mortgage repayment
Can you pause interest as well?
Yep, you can pause anything.
Would it just get bigger and bigger?
Yes, yeah. So you wouldn't be paying down your mortgage, the dollar amount.
But would you be racking up interest more than what you would have if you were paying it? Like, is it when you're, let's say for example, someone lost their job and they went in and they were like, okay.
Yeah. So you can go to interest only, which would shrink your mortgage repayments. And this is what happened during COVID, because a lot of people did lose their jobs and banks were like, give us a call, we're here to help. So you could either pause your payments completely and the interest just makes your loan amount bigger, if that makes sense.
Okay.
So it just it'll take longer to pay off. And when you do turn it back on, it'll be higher. Or you could just go to interest only, which means you're not paying down any of the dollar value of the actual amount of debt. You're just paying the interest payments. So your debt isn't getting any smaller, or what you owe isn't getting any smaller. There is ways around it. Yeah, should that happen. But that's probably my biggest fear, to be honest, is having to call the bank as a financial educator and like, help.
Hi, it's just me.
And then you ask me on the podcast, how's it going? Good, really good. I'm fine.
God, it's so weird being an adult sometimes, isn't it?
This is why mortgage protection insurance or income protection insurance is really, really good.
Oh, yeah, of course.
Because that can step in and help and pay, depending on your insurance, pay a certain percentage of your mortgage.
What is it? Like, how does it kick in? Is it like...
It depends what insurance policy, but you can get one that pays a certain percentage of your mortgage, or you can get one that pays a certain percentage of your income, so then you can just pay your mortgage.
Insurance,
so there's
lots
of things
insurance.
That you can help you sleep better at night if you do have that amount of debt.
Talking about sleeping, you know, when you cry and you get real tired.
Yeah, I can
I'm
see you.
so tired.
Want a
I
coffee?
feel like I need a nap.
Okay.
Maybe keep crying for a bit and then I'll be fine. But yes, look, not the end of my property journey, just a little bump in the road.
A little hiatus, yeah.
A little bump.
Little pause.
Yeah.
Reconvene.
Got a bit of gravel in the wheel.
We will get there. We will get there and we will throw a curve house party when Soph gets her house.
That's such a fun idea.
I am a content whiz
what
today.
What is going on? That is such a good idea. I love that. Yeah, party at mine. Maybe it could be like a demolition party, you know, if we have to like take a few walls out.
No, you have to get people to help paint.
Oh,
put on doorknobs. Yeah.
So
a working bee.
$30,000 quote to paint this house. Who wants to come over?
We'll give you a free investing club annual membership.
Okay, we'll come back with part 2 next week.
Yeah.
We've got 2 more episodes next week and the one after, so stay tuned for updates.
No more tears, I promise.
This conversation was brought to you proudly by Trade Me Property, a partnership that we are super, super proud and excited about, to be honest. And look, who knows how long this is going to go on for, because we're not quite sure what's happening with my pre-approval. Will it happen? Won't it happen? TBC, we'll come back to that. But yeah, thank you so much to Trade Me for allowing us to have these conversations. And you know what? Whether you are looking for property now or maybe in the future, Trade Me have absolutely, without a doubt, hands down, the most properties than anywhere else. So if you want to do a little dream scroll, have a look and see what's available, then I would highly recommend jumping on. We will come back with part 2 of this conversation next Friday. So let's just hope there's some exciting updates. But in the meantime, have a look at Trade Me. Okay, quickly, The Curve was created to empower and educate you about investing, but we are not financial advisors.
Our platform exists for educational purposes only, and it doesn't provide personalized investing advice for your individual needs and should not be relied upon to make an investment or financial decision.
And always remember to do your own research before making any investment or financial decision.
We're here for any knowledge and support you need, but the final call is always yours.
And thanks for being here.
You got this.
Yeah, we know you got this.